Welcome back to another episode of my trading vlog, where nearly all of the views come from returning subscribers. If that's you, hit the thumbs up button. If not, consider subscribing. Let's talk about AMC here for a few minutes. Still following this stock, even though I haven't held a position in a very long time. I sold out at $26. I'm sorry if that offends you. It does not offend me. You should always be ready to let go of a position, and this was probably one of my best calls, was selling AMC, which is crazy because it didn't start that way for me. Nope, I was a memester. I was all into the short squeeze, MOAS, and well, that's changed. So let's talk about this uptrend that broke. Started a while ago, about April 24th, and continued into early this month. We had a breakdown, a backtest, and a new push lower. So I want to start analyzing this push down. The first thing I like to do is to do a Fibonacci extension, because the third push in a move tends to go about 161.8% of the initial move after a trend break like this. So that would put a target down at 492. AMC coming very close to that level. Very close. On the 15-minute chart, we reached a low of 488, so a few pennies off there. Not so bad, right? We could be currently in what's called a wave 4 of 5 in a motive wave. Because wave 2 was sharp, wave 2 would be this pull up right here. And you can see it makes a nice three-wave motion. Wave 4 would be a flat, and that's exactly what we've got. We're trading with this tight trading range between 516 and 495-ish. We're just going sideways. What I would expect next is actually to see one more push down for wave 5, and that's going to be a test probably of this low back here towards 468. On the daily time frame, I've been saying we might go down as low as $4 here. And that might be just the start of a big push down to like 293. Yikes. So we're going to be following this all the way down. And at $2, I said I'd go long again. So at $2, I'm getting back in here, but not yet. Let's go talk about GameStop. I've forecasted a reversal at 2270. Yes. I've been doing a great job over here. This is probably one of my favorite things to look at right now because it is moving pretty predictably. I caught all the trend reversals back here. This one, with the exception of this low, I really wasn't sure where this low was going to be. Just kind of kept going and going and going. And that's the way it goes. Earnings came out, big flag didn't play out. Gap fill, almost achieved, and now we've had this reversal pull up. This could just be a big measured move down. We're going to get one more push lower, but we're going to need to see prices below 1830 to confirm that. Right now, this looks kind of bullish, doesn't it? Let's zoom in on the 15-minute time frame, and we'll talk about that scenario. There's a motive wave through here that pushes up higher, and then the price bounces sideways for a while between $21 and $20. This is a nice B wave, wave 2 of an ABC correction, and we've seen this motive wave push higher for wave C, hitting 2270, which was exactly where I thought it would be. I've been bullish on GameStop and bearish on AMC. Good calls. And now we have this big reversal. We'll see how far this goes. Typically, again, I'm going to be drawing that 1, 2, 3 extension all the time. And when that 161.8% level comes right in at a significant level of support and resistance, that's probably where price is going to go. But we'll be watching here very closely. On the 15-minute time frame, the MACD, it fell into a very bearish extreme, and now we're starting to see that pull up a little bit. So for now, it's probably sideways to up before down, unless we get some sort of triangle through here. If we get a triangle through here, we'll be saying that this is wave 1 with an extension, and wave B, and then we'd be waiting for a bullish breakout for a higher price target or a breakdown. So there's just a lot that the price can do from here. Hitting 2270 and reversing was a big deal, but we don't get really bearish until we cross below 21 again. So there's GameStop and AMC. Those are everybody's favorites. I'm currently holding PLBY at a loss. You can see that loss down at the bottom. I'm holding red. I'm not too worried. My analysis is largely fundamental over technical. I had price targets up here at 217 and 239, and the price has since then made a new low. It's very nominal, though. Very nominal. The low is practically the same. In Elliott wave counting, you've got to respect it. I want to say we may be setting up a double bottom through here. That will confirm as price passes 170, which it didn't do. Instead, we saw the price reject off that level initially, so that's a little worrisome. You're going to see that I have an A, B, and C label here. Waiting for that wave C to appear. It does, to me, look like we're going to get a corrective bounce up, probably to fill the gap that was formed by this massive dive from earnings. And earnings weren't, like, all that bad. I mean, they weren't great. They really weren't great. Waiting for cost-cutting measures to come in, the selling or perhaps restructuring or whatever of Lovers and Honey Burdette. That's going to be huge. It'll bring the company into a more cash positive situation for sure. I was trying to find a chart pattern through here and I couldn't really find anything. Nothing really looked that good. Nothing really looked that good. There's of course 2 touch points down here and 2 up here. We could be in some sort of ascending triangle. I considered that. Could be a rounding bottom with a heave. Could be a lot of things. Again, we're just moving sideways between $1.70 and $1.50. We're going to need to see a breakout above one of those 2 levels or below to really understand what's going on. And 170 is a whole lot closer. I'm hoping, I'm bullish here. I'm still holding. Just going to hold for a long time. Let's check out SPY. I'm going to zoom out to the daily time frame, and we'll talk about what I see there. There is the possibility that there's a big inverted head and shoulder through here, where the head occurs down here at these lows we saw last year, and we're just putting in the second right shoulder, which mirrors the first left shoulder, which happened in May of 2022. We've had a breakout above the neckline, which I think is best characterized right here. And the price has pushed above, come back, and tested that, and is now setting a new high. So we have to really respect that we've had a 1, 2, 3 trend reversal. There could be another little test down before we see a breakout up. But again, you're going to see that I have an A, B, and C labeled here. And I've been following this in the Discord. Looking for 435, possibly even 454. I am still bearish on SPY. I still am bearish because there's another way to look at this chart. Take this neckline, pull it up and down, and now what do you got? Now we start to see that there could very easily be a horizontal triangle through here. Let me see what our touch points would be. I think this is A, B, C, D, and oh, look at this. E occurs at this top trend line at 416. Wave E typically pushes out above that AC line, which here's our upper trend line, and pushes up higher. So I'm very specifically going to be looking for a rising diagonal of some sort coming out of here if we do get more price action up towards 435. What this would be is wave B in another A, B, C push lower, where wave A is coming from the top down to that low, and this is all just corrective. You can see implied volatility here is generally falling, which is a good sign that we are in a corrective mode. Also, the RSI hasn't reached overbought or oversold in a very long time on the daily time frame. So definitely we're still in corrective territory. Don't get too excited yet. Even if we do get all the way up to 477, which could happen, that might just be a double top setting up. And I say that because I believe we are in wave 5 of a very large degree. So I'm going to turn on weekly max here. And I'm actually going to leave SPY. We're going to go to SPX. This is where I have that analysis notated. Let's see here. Primary plus. There it is. Wow, it took a while for that to load, didn't it? Okay, so you can see wave 4 down here. I think that's super cycle. We're working on super cycle wave 4 and then pushing up for wave 5. If we get a push to this last high, then this wave 4 completed back here, and I'll have to revise this count. Maybe. You can see I have A, B, and C labeled here in yellow at the cycle degree. So I wouldn't really need to do much to revise that count. More or less just adjust what my wave degrees are. We have broken this downward channel that I'm showing in red here. And that is probably, it's like, I'm serious. It looks like SPX has bottomed, right? But part of me thinks that this is just a temporary short-term push up, and it's going to be very euphoric, very emotional, and then some bad news will just turn it around. After all, on the very large degree, we are looking for our next big spill, I believe. If we don't get it, then, I mean, the stock market is just broken. It's just rigged. And I say that because... I say that for so many reasons. I don't need to go into it. SPY, SPX, GLD. I've always been bullish on GLD, and I've been saying it for a long time. We've had a big push up. We had a pull back, and now we're setting near new highs. We're very near new highs. Maybe I can turn on a different set of drawings here. Looking for wave 5 to peak out, and it looks like we might be there. It's very possible we go into a wave extension. On the weekly time frame, it looks to me like we have some sort of... ascending broadening wedge or megaphone through here. It's possible that this push out will reverse and we'll see the price push out higher. We're going to need to see a reversal for that. Otherwise, this still looks really bullish to me. I'm sorry. This just looks really bullish. This looks like all like part of a new motive wave where we're really in the first wave of 5, and that third, maybe this is the third wave extending. I still show a price target at 198 and 217, very bullish on gold. I've been waiting for the dollar to push the prices of the precious metals down, but that has not been happening. It looks like we might have some bearish divergence on the RSI. I'll say it once, I'll say it again. It's pretty typical to have those divergences broken, and the price will lead the RSI up and out of that divergence, set a significant price level, and then reverse. So a lot to wait for there as well. Going over to the dollar, I'm waiting for the dollar to bounce, like I said, and this chart doesn't make sense on this time frame. Let's go into the daily time frame and zoom in a little bit. It's still a little rough. It's a little rough. We could be seeing a double bottom form here. This looks a lot like PLBY right now, actually. That's kind of funny. Was not expecting that semblance to appear, but it did. We had a broadening pattern and a partial decline, which I did note. And I was saying if we get above this prior high at 102, we could see a push much higher, even as high as 105, right? But that's not on this chart. I'm going to need to figure out some of my charts here. I keep too many, you know. I keep too many. 103.93. Anyway, so the dollar is starting to bounce higher, which is what I was expecting. This is a pretty strong motive wave. When you see the RSI reaching into overbought like this very strongly, this is a kickoff signal to me. I think we're going to see new highs. But that has yet to be seen. A lot relies on Congress passing new debt ceiling legislation. Also, there's a lot to do with what the Fed is going to do next. It's just insane. It's just insane. Like, the same news topics have been driving markets for the last couple of years, which is insane to me. It is. It really is. Anyway, that's what I have for today. This video is getting kind of long, so I'm going to wrap it up. Call it a day. Happy trading.